over the difference between SPY and VOO and which one you should use and why. So both of these are index funds that track the overall market. So again, if you want to just invest in general, the best thing to invest in will be either SPY or VOO because they track the S&P 500, which is the overall market. So you're diversified in all 11 sectors, are going to generate about a 10% return every year, and you have the lowest risk given all those situations. So again, this is the best thing to invest in. But which one is better, SPY or VOO? They both track the same thing. Well, if we're looking here, this is the Impeccable Stock software, which actually will break down stocks compared to each other. And so if you look here, you can kind of see the stats behind it, but I like to see the summary. So again, the summary is 100% what I believe, but then I'm also going to explain that a bit more why. So again, both of these appear to be buys. You know, they're great stocks. SPY appears to offer more liquidity, which I'll explain in a second, which means it's easier to buy and sell. VOO appears to have a better risk to reward, which means you stand to make more money. VOO also has a higher accuracy rating, but regardless of all things, these stock appear to be about the same, correct? Because they are the same. So again, let's break down SPY first. So SPY is great. It's roughly around $433 as the time of recording this video. You're going to make about a 10% return every year. Now, where the difference comes in is you're going to see the expense ratio. So again, when it comes down to ETFs, there's going to be an expense that you pay each year for owning that ETF, because a company that made it, they have to charge money for it somehow. So you're going to pay a 0.09% expense ratio on SPY, which will be a slightly higher than VOO. Now, looking at this, why would we want SPY over VOO? Okay, for in this instance, you would want to pick SPY if you are going to use some type of alternative strategy with it. So SPY has way more liquidity. That means that there are way more shares being traded, and that also means that there are options and they're very liquid. So you can easily get in and out of the stock and options. Look, we're at about 30,000 volume for just this option alone, and so that shows how much liquidity this has, and liquidity is huge, especially for alternative strategies. For instance, if you're investing in SPY and then you are using covered calls to actually make more money and increase your income and have more of a monthly income with your investments, then SPY will be your number one option. Or if you want to do other things with it, SPY is going to be huge. It's going to be a great source of liquidity, especially for just normal stocks, but also for alternative investment strategies. Now, VOO. So remember that SPY has a 0.09 expense ratio. If you can see here, VOO is a little cheaper. It's around $394, but it also has an expense ratio of 0.03. So it's 0.06% cheaper every year. So they're not going to charge you as much money. But with that, you can see here that the volume is only 261,000 right now, when the other one was in the millions. So you can see here that VOO is a great option for those who just want to buy a stock and hold forever, and they're not really going to do much else with it. Now, again, I highly advise against that because you can use alternative strategies like covered calls to dramatically increase your income and decrease your risk. So I would pick SPY, and that's my go-to choice. But again, this is up to you. If you're just buying a single stock or a single ETF every single week, VOO may be your best option. So again, that is the difference between SPY and VOO. They both track the S&P 500, but they both have advantages and disadvantages. Anyways, guys, thank you so much for watching. Smash that subscribe button, and we'll get into the last video of this course, which is how to build wealth by investing in index funds.